guess that works. Oh, I'm about to hit palladium. All right, you guys ready? Hang on, guys. Oh no, I missed my palladium by a penny. All right, hang on. I just got so many windows open. Move this over there. I gotta click this button. Okay, now we can start. Yo, 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 yo! Happy Monday. Happy Monday. Welcome to Forex.today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, with the overriding goal of lowering our risk, with the overriding goal of surviving this thing we call Forex. I bet you can hear me now. So thank you, Windows. There must have been a Windows update. Yeah, thank you, Microsoft. So apparently every setting has been adjusted. So I'll have to put it back. So hang on. Let me start over again. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. There we go. Yeah, so I have to change the setting on everything, anyways. It's the economy, baby. That's all. Wait, you can't see that. That's all. Anyways. My name is Wayne. I was trading Forex in the middle of the Super Bowl. That's how you define what a foreign exchange trader is. So, very cool. Very interesting. We had dollar strength most of the evening and now suddenly dollar weakness. So we'll take a quick look around the world. I imagine we'll do things like gold, oil, and Bitcoin. We'll look at the stock markets around the world, and I'm sure we'll look at dollar pairs and some other pairs. I popped a little form, a little survey into the chat room. It'd be great if you could participate by completing that form and finding out where you stand relative to everybody else. Wouldn't that be neat? It's one benefit of being part of this community. Knowing where the bulls are and where the bears are and which side you should be on, or maybe which side they should be on. Anywho, ask questions. I'm here to help. We'll probably be here an hour or so. Favor wants to do Kiwi dollar long. Okay, we can probably take a look at that. And thank you for not saying, Favor, what do you think about Kiwi dollar? Okay, so I appreciate that you put that you're a bullish. I appreciate that. And so we can go through there. All right. In the description below, there are some links I'd like you to visit. One of them is to my book, Strategic and Tactical Forex Trading. If you've read it, I'd appreciate it if you left a review. There's hundreds of reviews, or more than 100. There should be 10,000, but 100's a start. Maybe you could be the 150th. Maybe you could be the 200th review. That'd be great, but it starts with you. Took me over a year to write that, and I suffered carpal tunnel syndrome for a couple of years after that. So if you could maybe take 2 or 3 minutes and leave a review, you won't suffer as much as I did. If you visit fxbootcamp.com, you can join a community that I've been running for about 20 years. And in the 20 years, we've done about 100 hours, certainly 88 hours of recorded lectures, not little quick tip little videos, 88 hours of lecture. Yeah. So you get a little bit of Harvard for $88 a year. And now we've added a community feature where if you're a video only member, a basic member of FX Bootcamp, you still have access to the rest of the community to discuss trading and to get feedback. Lastly, I want you to visit tradersway.com. You need a broker. I need a broker. They need a broker. We need a broker. He, she, and they need a broker. I recommend tradersway.com. I trust them. They've earned my loyalty and my respect. And I'm using their platform while coaching. You can see that the execution speed is fast. The spreads are narrow. The swaps are great. But ultimately, they earn my loyalty and respect. So if you open up a demo account, maybe they can earn your loyalty and respect too. Give them an opportunity. Steve Murphy says, risk on or risk off? Is that on S&P 500? Great question, Steve. My point of view of the market is based on Newtonian physics. So, to think about it this way, Steve, the moon rotates around the earth and the earth rotates around the sun. And even the direction the sun rotates is based on the universe. So if you say risk on for the S&P 500, it would be risk on for the aggregate, which means risk on everything. Okay? Now, Favor says bullish on Kiwi yen, but bullish on USD yen. Sorry, Kiwi dollar. So that doesn't make any sense, Favor. So you're shorting the dollar against Kiwi and buying the dollar versus yen? I don't trade that way. Unless you're like, Wayne, I need a hedge. Okay. But anyhow. So I don't like the idea that you're short dollar on one pair and long dollar on another pair. You see my point? I just don't like it. Okay, pound doing okay today. Euro doing okay today. Yen collapsing. Kind of interesting. We're learning more and more about Ueda. Well, there you go. I guess then Favor. Great. Okay, we'll get to that. But I don't think dollar's that strong right now. But yes, yen is quite weak. Just looking at this favor, it looks like you're probably better off Aussie yen, pound yen, euro yen. Okay, maybe even CAD yen. So you may have picked a horse that's going to cross the finish line, but not first place or show. Okay, anyone else going to complete the poll? 5, 5, 5, 4, 4, 4, 3, 3, 3, 3, 2, 2, 2, 1, 1, 1, 1. Geek busted. Doom, doo, doo, doom, doo, doom, doo, doom. Let's see what you got. Okay, most people are risk on. That would be dollar down, yen down. Let's take a look around the world. Start with the stock market. Let us start with Australia, I suppose. Drop into a smaller time frame. Okay, and we have stabilized on the weekly buying pivot, and the sell zone is in here. Okay. I've been around the world and Okay. So even though that's green candles today, it's red candles most of the week. That's what that says to me, from a bearish point of view. Then we work our way over to, I suppose, Euro 50. And on this 4 hour, it's still bullish. But because we dropped down to the 55, it smells more like a triple top. So we'd kind of have to adjust this a little bit. Maybe it does only something like this. That's right, Luis. Or Lewis. So you're either putting risk on the table or you're taking risk off the table. In particular, leveraged products. It's the basics or even basis of trading. If you're not interested in risk on, risk off, then you're an investor, not a trader. So anyways, going back to this, you can see we've had green candles with the 55 acting as support. Let me zoom in here a little bit better. Okay, so you either have it going up to the monthly resistance or the weekly resistance. See you, Stevie. You can see the original plan had it kicking off the 21. Since it didn't, then you adjust. DAX was the next to open. Sort of the same thing. So we've already measured this, so I'm repeating myself from a couple of days ago. But a couple of days ago, I measured from the top of the crown to the neckline and gave you this. Okay. See? Santiago, the first thing you need to do before you get there is you need to learn how to trade. So that means I recommend the first thing you learn is price action, which will then expand into multiple time frames. Okay, price action is a leading indicator. Then the next thing you'll need to learn are pivot points, which again are leading indicators, so that you have an understanding of how the market moves. Later on, when you learn fundamentals in macroeconomics and central banking policy and monetary policy, then you'll end up learning why the markets move, which can help you anticipate future moves that don't exist yet. So it wouldn't matter if you don't know how to trade. So the first thing is you need to know how to trade, and that's how the markets move. That's price action and pivot points, in my opinion. Then, Santiago, you would learn macroeconomics and monetary policy. Luckily, I have courses on that. Favor risk on or risk off has nothing to do with USD individually. It's a macroeconomic issue. So the entire market is either risk on or the entire market is risk off. Santiago says, great courses, by the way. Oh, thank you. So I always think in my mind, if you don't know if the market's risk on or risk off, why are you trading? It's a facetious statement, but in the back of my mind, it is true. You don't know if the market's bullish or bearish, but you're trading. Why would you do that? Right? That's dangerous, right? Also, I very, 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 very rarely trade USDN because they're both funding currencies. So if I say risk on or risk off, you would never trade USD yen. If I said I'm risk on, I wouldn't trade USD yen. And if I said risk off, I wouldn't trade USD yen. In similar ways where I don't like doing things like trading Aussie versus CAD. Why? They're both commodity currencies. And generally, in a normal world, we're looking at global aggregate demand for commodities, not specifically only commodities going to China. And right now there's a divergence of will China buy Australian commodities, buy more Australian commodities, and will the United States buy less Canadian because of their individual economic conditions? Well, that's pretty rare. And that's not global macro, that's specific to those countries. Stevie says, hey, man, I'm reading your book for the third time. Still learning things from it. Thanks. Hey, my pleasure. I love to hear that. I haven't read it ever, but I did write it, and I don't have a copy anymore. I guess I'll either need to buy a copy or write a new book. So anyway, so I got that. Let's leave the DAX and see what this shows us. Now, we got two different stories going on here, and that raises a red flag for me. So you got to be very careful, in my humble opinion. Okay, so I would look for something like this. Ooh, whoa, whoa, whoa. A little bit fat, huh? Sorry, gravity averse. Okay, I'm thinking this, but tomorrow we have CPI. And then the next day we have retail sales. And these things could push this all over the place. But I am basing my opinion on monetary policy. And so I think we'll have some up before we have some down. In that scenario, you would look like this, and then you'd paint your picture like this. And probably today or tomorrow, I would like to sell this. I'm a little worried it's going to pop and go all the way back to 42, but I'm going to kind of wait. I'm going to lie in wait, if you will. And what I'm thinking is some form of this for the week. Now, I'll show you the challenge here. The challenge is the NASI on the daily says the opposite. Now, it's still probably too early to buy according to stochastics, but you might want to cut the corner and already plan this out. And stochastics already put you long on this, on the 4 hour. I don't know if you believe this one. Okay. Now, as you can see, what I thought would happen on a daily is that we would make one more trip down and then, so you'd probably get like one of these things, and then the big move. But I don't know. I don't know the future. Maybe I'm being too finesse. Maybe you should just buy it and be happy with it. I don't know. Okay. But I'd like to be a bear, and I can't be a bear that way. And the bearishness on the S&P 500 is straightforward, but this is not straightforward. So one of them is probably wrong. Well, Richard, somebody's going to try to front run it. You know what I'm talking about? Somebody's going to front run it. So anywho, you got to look at all these stock markets and decide up or down. Now, if they're gobbledygoo, where half of them are up or half of them down, how do I read that? Is that risk on or risk off? Frank, I need you to remove the words thinking and maybe. Okay, Frank? Instead, I want you to say your research shows that the Russia and the Ukraine war will push risk off if CPI is bad or something. Okay? You got to remove that ambiguity, and you need to back it up with research, or you say you're trading risk off because of the Russian-Ukrainian war, and therefore, okay? So again, I'm not beating you down. I'm just trying to be a good coach, and I'm trying to teach you how to be an expert. And experts have very distinct, very clear opinions. But then the next step is, Frank, it's based on your research. That's why you're an expert. You've done work, and your work has a clear point of view. Okay, so anyways, yes, so to answer the question, if it's gobbledygoo, half of it's up, half of it's down, trade a cross pair. Don't trade a dollar pair, don't trade a yen pair, trade a cross pair. That's why sometimes when the market is trending and somebody says, Wayne, will you look at Kiwi CAD? And I'm like, no, screw you. What the heck are you talking about? What are you, a knucklehead? You're missing the trade. Oh, but I always trade the Kiwi CAD. Well, then you're not doing your job. Okay? But when there's no trend, that's where you find something strong, find something weak, and pair them together. Cross them together. Okay? Cool. All right. So let's do gold, oil, Bitcoin. Bitcoin. Okay. Okay. What do you stink? Up into the right. Plan A is kick it off the moving averages. Okay. So we can go here. Plan A, kick it off the moving averages. That's a squeeze low. I don't like those. It's an OOP type trade. But nonetheless, that's plan A. Plan B would be the one I have outlined up on the higher time frame. Favor says, what pairs are not crosses? Okay, let me define it in a positive way. What pairs are crosses? Okay? Think of it this way. Here's my definition. There are three funding currencies in the world. US dollar, Japanese yen, and Swiss franc. So we have a European currency, an Asian currency, and then the reserve currency. Makes sense. And all deals are going to basically represent one of these three currencies. All deals. Just talk about business. I mean, the flow of capital. So if you're going to do international business, and what business is not international business unless you're a maid or a gardener. If you're a gardener, you're probably not doing international business. All right. So if you're doing international business, one way or the other, it's going to impact one of these three currencies. Now you're like, well, Wayne, 80% of these international business transactions are done in dollar. Yeah, but the money may have originated in Switzerland or in Japan. For example, when money is being saved, because there's no international business transactions that look good to you. All international businesses look bad to you. So where do you put your money? In your Swiss bank account. And then business conditions change, or the return on the potential deal is so good that it entices you out of safety and into risk. So that's risk on. So the money leaves, even if it leaves Switzerland to go to the US, it gets converted to dollars and then gets converted into an international deal, like maybe money comes out of Switzerland, gets converted into dollar, and then dollar gets converted into oil, and then oil goes to Japan. And you're like, but why wouldn't it be in yen? Because nobody in Japan wants it in yen. So anyways, whatever. All I'm trying to say is the funding comes from the US, but there might be a lot of leverage going on using these other pairs. But just think of this is the money that gets transacted into a deal. Whether it's an investment deal in the form of buying financial capital, or maybe it's a deal building physical capital, like exchanging your Swiss francs and investing that into a factory in Vietnam. Now you're building physical capital. Or maybe you're converting Swiss franc into Aussie dollars. So now the Aussie dollar buys an Australian bond paying 4%. And so now you own financial capital in Australian dollars. Okay, so the flow of capital is, right? Money leaves Switzerland, so the value of the Swiss franc falls. And it goes to Australia, so the value of the Australian dollar goes up. If money leaves the United States to buy gold, then the value of gold goes up and the dollar falls. Okay, same thing. So all of this is based on one thing, risk on or risk off. So when there's risk on, what are you doing? You say, take your money out of your Swiss bank account and go buy something with it. Take some risk. Make an investment. See, leaving your money in a Swiss bank account is risk averse. So you're like, I don't even care if I earn a negative yield. I'm going to just park my money in Swiss franc in a Swiss bank account, because if I lose 1% in negative carry and everybody else loses 18% because the S&P 500 falls, well, shoot, I'm better off just leaving it in cash in a Swiss bank account, you see? But at some point, cash is trash, and you're like, I need to deploy my capital to get a higher return on investment. I want to buy the stock market, some, Australian stock market. So it leaves Switzerland and it goes to Australia. So when it's risk on, these fall. See, when good things are happening in the world, money is leaving these economies and being deployed somewhere else for a higher return. But the higher return is a function of risk. Risk on, these fall. Now, risk off, these tend to strengthen because money leaves the foreign countries and moves it back to Switzerland, for example. Okay. So these are all your normal risk on, risk off pairs. So when I say when you don't have a strong risk on or risk off trend, then trade a cross pair. So what is a cross pair? Now that we've defined what is a proper trading strategy, then what's a cross pair? Well, when you don't have a risk on or risk off trade, then you have a relative strength trade. Okay. And that's where you're not looking at global macroeconomic trends. You just you're looking for what happens to be strong today. And remember, it's not necessarily, in fact, it's not a risk on or risk off thing. There's just something going on with that one particular country that makes that one particular currency strong today. But because there's no macroeconomic trend likely behind it, it might be weak tomorrow, but you don't know. But today it's strong. And then you look at all the currencies around the world and you identify something that happens to be weak today. But you remember, it's weak today, but not necessarily because global macroeconomics. It's just something that just happens to be weak today. Okay? Now, Richard says, like CAD Swissy, well, I would consider that a risk on or risk off play because of the Swiss franc. So what is a cross pair? It could be a pound, Great British Pound versus CAD. It could be like Euro Kiwi. And so what you'd have to do, for example, is do your analysis, and that's what your relative strength exercises are for. And of course, I've trained you how to do that a million times. And if you don't know how to do that, you're in serious trouble. I'm giving you the very basics of foreign exchange trading right now. So if this is hitting you over the head like a sledgehammer, oh my God, you need to join FX Bootcamp like a year ago. I mean, dude, pay the $88, get over it. So what if I use that money to buy a yellow Lamborghini? What do you care? Okay? Get over it. So anyways, you do relative strength exercise, and you just might find that today CAD is strong. So you're buying CAD, which means you're selling pound, okay? And maybe you're looking at Euro CAD. So maybe you're selling that, and you're looking at USD CAD. And so maybe that's long. But then Kiwi is strong, so you might be doing the same thing on Kiwi. Now, why are you doing all of this? You've done a relative strength, so you've compared all the currencies to each other, and you've decided that CAD and Kiwi are your strongest. So now you got to go find all your weak stuff, and you might find Euro, Pound, and Dollar, or maybe it's all European currencies. Maybe it's Swiss franc. So, right? And so you sell this, sell this, sell this. And again, it may not be a global macroeconomic trend. It's just what kind of happened today. And I'll show you in my presentation, which I will give to you now. I think I'm going to move it to March 1st. But eventually I'm going to officially launch my fundamentally based, super secret fundamentally based alert service. And I will show you, I actually started trading this way. And I'll show you exactly how I did it. And I did the whole thing from a spreadsheet. To do this, I didn't even look at a chart. And I think if you're struggling with consistent returns, it's because you look at a chart to make a decision versus having made a decision and then looking at a chart. And oh my God, what a difference. But anyways, all of these are cross pairs. Okay? And so often what I see is we have a clear risk on day and somebody wants to trade Euro Kiwi. I'm like, not on the clue train. You just like, you're not even looking at the right thing. And then you say, but look at the MACD or look at the moving average or look at this. I'm like, you're just setting up the wrong trade in the wrong conditions for the wrong reasons. But you might have the technicals and you might even make money, but you're missing the entire point. And that's the part that scares me. Okay? Have you ever seen someone that pull up on the corner to turn right and they're not looking left before they enter the traffic? I'm like, dude, didn't even look. Just drove right out into traffic. Dude, you got to look left as you merge into traffic. You got to be looking the right way. Otherwise, you just might get run over. Oh, speaking about that. Oh my God. Hey, did you hear Porsche's going to make a third row Cayenne? But it's probably not even going to be called a Cayenne. So they're going to make now a full-size SUV. Yeah, Matrix, welcome to Florida. Yeah, I'm excited about that. Can you imagine a big, heavy Porsche? Excited about that. What do I think about Aussie yen? Yeah, okay. Well, let me do the... let me get to... no, I thought Colorado had the worst drivers. I've been around most of the United States, and maybe it was just a bad day, but in Colorado, they were just rude. They would just cut you off, and there was no reason to cut you off. I'm like, dude, we're in Colorado. You can see 900 miles. Why do you need to cut me off? Like, dude, just get up there another car length and move over. Like, why do you have to cut me off? Okay. But anyways, no. Who was it? Somebody asked me about something. Oh, USDN. Maybe I just kind of indirectly answered that. Okay, but anyways. A few said Aussie yen. Well, okay. So in lieu of doing a full relative strength exercise, let's look at this. Okay. Pound, yen, Aussie yen, CAD yen. Okay. So let's do those. Now, the interesting thing about this pair is in the back of my mind, I ask myself, I wonder if the biggest trend that comes out of this year is not even dollar. Kevin says, yeah, I'm in Colorado. I'm a lot of bad drivers. Yeah, I found it wasn't even just that they were bad. It was just rude and inconsiderate. I'm like, dude, what was the point of cutting me off? Right? Driving from Fort Collins to Boulder, and you get cut off every time someone enters the freeway from an on-ramp. They want to speed up and then cut you off. Like, dude, go in front of me, go behind me, but why be rude? Just rude. But, you know, look, that was 1994, and I still remember it, huh? What an old timer. Why, when I was your age, the worst drivers were in Colorado. But, yeah. June. Was it June? May 1994. That's Boulder, people. Actually, you know the strangest thing? I drove there for a party. We get to a party, and we have a keg of beer and stuff. And I'd never seen this before or since. The cops showed up, because it's an epic party, and they took the keg of beer. I'd never seen that before. Put it in the trunk of the cruiser. Took the beer away. I'm like, You can't do that. That's private property. Anywho, it happened. I was there. All right, let's get on with this. All right, Piggy. Okay, we're moving from the inside. Yeah, Boulders are great. Yeah, up on good coffee shops up on the hill. They do that there, Jim. They do that there because to me that they can't take private property. Right? They can't like so you're like if they could take the keg of beer from a party, why can't they take the TV off the wall and say, "Well, this is to punish you. We're only doing this because you're loud." You're loud, so we're going to take your beer, we're going to take your speakers. We're going to take your sound system, right? Like whoa. But whatever. They can't, but they do, right, Tim? Evidence, yeah. Hey, in other countries, they just shoot you. The party's over, everybody. Which one of you here is the host of this party? Nobody raises their hand. Don't raise your hand. Don't raise your hand. All right, back to this. What's the trend? I don't see a trend here. So it might be an illusion, might be a mirage. I look at this and say there's a lot of resistance above us, and I don't want to do this. Now, what I was saying before, the new, is it official yet? I don't know. The new governor of the Bank of Japan, Ueda, is probably going to come in and over the next 12 months, I don't know if it's going to be in 12 days, 12 weeks, 12 months, but probably over the next 12 months, will raise rates and, okay, so it's a bullet point, and raise yields. One is quantitative, one is qualitative easing, which, okay, means the end of cheap money and the end of yield curve control. There are strange police in Russia. The strangest thing I've ever seen, and maybe it tells you a lot about Russians. I tried to bribe a Russian border guard, or sorry. I know a guy who tried to bribe a Russian border guard, and they were not interested in the money. They were more interested in not doing the work. They had a choice: do the work, help me out, take the money, or just not do anything. And they chose they'd rather do nothing than take the money. It didn't come across as something like, oh, well, that wouldn't be ethical. What the hell are you talking about? So anyways, it's just when you travel around the world and you get yourself into interesting situations, you start to see cultural differences. In Mexico, I have lots of interesting stories. One of them, I was driving down the freeway, and the police, the Mexican police, had a stop sign. Now, what they did is they took the stop sign and they put it in the center of a used car tire, no rim or anything, just the tire, and they put it in the middle and then filled the middle of the tire with concrete. So now they got a pole with a stop sign and a big heavy rubber wheel so that you could roll it. Cool. So they rolled it into the freeway. And we got pulled over for running a stop sign. Not a freeway, but a highway. Okay? On the highway. So they come out and they're like, well, it's Sunday. There's no judges available till tomorrow morning. So you guys, you fellas, you're going to have to spend the night in a Mexican prison. And you can talk to the judge about your careless driving, having run straight through a stop sign. All right, so how do you solve that problem? Right? So anyways, there's different cultural, right? Different cultural. So anyways, we found a solution to that problem, and I didn't have to spend the night in a Mexican prison. All right. So anywho, so you see what I'm looking at here? Maybe this is an inverse head and shoulders. Maybe. Could be a rabbit. Could be. So how do you resolve this? Well, we're below the 200. We're below the 55. So I would argue this is still somewhat bearish, and I don't necessarily need to buy this. Now, going back to what I was saying before, it would be interesting if suddenly one of the biggest trades of the year is money repatriating back to Japan. So the yen goes from ridiculously weak to going back to where it was. Okay? Where it normally is. Now, because I do quantitative analysis, I can say, well, what if that's true? What if the second half of the year yen gets strong? And that this new guy in charge might start implementing such things soon as soon as he takes control. When would I start to set up a pound yen trade down if that might happen? So you see, now I have a theme. So 2 or 3 weeks ago in the swing trading group, I was teaching thematic investing. Okay. Now Matrix says May. Okay, well, and again, you can't say thinking. Okay. Matrix is preparing for May. Why May? Well, I would argue that I'm looking at seasonality. Okay. And I could say instead, Matrix, the new guy takes control at the end of March, beginning of April, and you're doing quantitative research of typical capital flows over the last 20 years and over the last 5 years. And you've analyzed all the different yen pairs, and you think, and this may not be the answer, I'm just making up as I go, that you're going to watch pound flip first, and then you're going to watch the other thing flip, and then the third thing flip, and you'll slowly leg into a basket starting around April 1st. Now, you might start building first, or before that or after that, but you believe, based on your quantitative research of capital flows, that this is about to appear. And so selling at this pivot, by the way, is the best selling pivot of the month for bears. This is where bears should be selling anyways. And so we just had this big green day up. Who cares? If you're a bear, you're like, okay, so we have a one-off morning. Okay, so we have a ripper day today. Great. All it does is set up your strategy. Now, if you're pure tactical and you're on a 15-minute chart, this is very exciting. But on this time frame, you're like, there's a lot of probability of something like this going this way. Then you add a change in capital flows by changing central banking policy. Now, do you remember? Do you remember I said, why do we even track news? It all comes down to a change, delta's change, in monetary policy. So if our analysis of the Bank of Japan tells us there's an increasing probability of a change of monetary policy at the Bank of Japan, which way? Looser or gooser? Okay, looser monetary policy or restrictive? And you're like, restrictive. Okay, then you want to start looking this way. Now, it might not be today. It might be a week from now. It might be a month from now. But maybe by the end of the year, and you're like, okay, well, that's a little too flexible. Okay, then look at seasonality. Okay, and now you're thinking sometime in the second quarter. Why? Because you've done a 20-year and 5-year analysis of capital flows. And that's typically when yen gets strong anyway. And then you would be not only taller and thinner, but more beautiful. And people will laugh at all your jokes. Did we do WTI? I don't remember WTI. I think we had that, but I think I skipped WTI. Oh crap, did I miss it again? I missed it twice. Jesus Christ. Damn it. Dang it. Shoot. All right, so I wanted a short palladium, and I hit my entry twice. I thought for sure by the time I started this webinar, I was in. I thought I was in. Family time, you join FX Bootcamp, and the templates are there for free. Richard says this new guy, Uwade, yeah, is not going to change policy, but well, what I said was interest rates. Okay, and yields. So let me expand on that. What do I mean by that? He will raise interest rates. Okay, that's the actual interest rate. Now, yield has to do with the bond market, not the interest rate market. And what he'll do is kill yield curve control, which artificially lowers yields. So the yield on the 10-year JGB could go from 50 basis points to, let's say, 200 basis points. Very quickly. What would that do for the Japanese yen? JPY would go up. So one has to do with the interest rate, and the other one has to do with bond yields. Okay. So anywho, looks like I missed out on palladium. Dang it. All right, so what do we got going here? So I did cover Bitcoin already. Here's my gold trade. Okay, it looks like I started the week okay. We're kicking off the 4-hour 21. So this is a second test. This is basically a role reversal. If it makes a new lower low, then that makes this a lower high off of what used to be support and is now resistance. Ride the 21 down. Cool. But I also was trying to get short palladium. You can see it's a very, very boring, typical day trade. I have it here. I guess it should have been here. Okay. So poopy diapers. So that's okay, which means I'm long dollar and short metals. Okay, which is congruent with being short the S&P 500. And of course, what I'm expecting, this was all covered yesterday in the day trading group. Something like that would be great, but I've already showed you that. Quickly look at some dollar pairs. Oh, we have an index question. The same as any other indicator. Go to the indicator list, open up the indicator, and adjust. Okay. So this is a euro index, so I want euro to be selected. Okay, really simple. Okay, so this is from last week. We'll see how this goes. Right now it's doing okay. It's not really going up or down. This one is great because last night we were talking about how it's going the wrong way. So I'm neutral in this one. And I think I'm glad. I think I'll just wait. Kitty cat. Maybe you're better off on a CAD yen or a CAD Swissy. If you identify CAD as unusually strong, right? Let's say you felt like US dollar was reasonably strong across the board, but Canadian dollar is clearly stronger. Then you can set up your cross pairs. So you do CAD long versus Swissy, CAD long versus dollar, CAD long versus Swiss franc. And you start lining them up. If CAD is very, very strong, you just got to find something weak. So like if USD, if Aussie USD is down, then you definitely know you want to trade CAD versus Australian dollar. If euro dollar is generally down, then you definitely want to trade Canadian dollar versus euro. You see? Sure know what I'm talking about? Taking a look at Pig Dog. See if I can adjust this. Oh, cool. I couldn't do it last night. Okay, that was the trade plan on Thursday. Okay, on Thursday we created that trade plan. And now it's Monday and it's still valid. And then Kiwi, mixed bag today, right? Okay. Well, the sell is somewhere around 63.74. 63.75. The sell of the week, if you're a swing trader, was 63.48. 63.48 if you're a swing trader. Oh, you mean that? Yeah, well, if you're a swing trader and you have a strategy, that's your sell. And now maybe on 15-minute charts or even smaller, you're setting up your trades. Okay, what you want to see is, oops, clear this out. What you want to see is down to the 55, lower high, lower low, lower high, lower low, lower high, lower low. Okay. Can I look at gold on a weekly chart? Okay, why? Okay, I'll do it, but riddle me this. Why? I'm just going to put a simple... Okay, why? Thank you, thank you, thank you very much. Why, Jeffrey? Okay. Now remember, I'm not trading this technically. But you might have it this way now. But I'm not trading this technically. I'm trading it fundamentally. Okay. So what I can tell you is the projected high for gold this year was $1,946.70. What does seasonality say about gold? Why don't you pay the money, Richard, and find out? I've had to pay the money. Thousands and thousands and thousands and thousands and thousands and thousands and thousands of dollars? Yeah. You can pay the $79. All right. Okay. So what's the projected bottom? 1,491. Be a simple kind of man. Can you do this for me, son? All right. So that's that. Can you imagine I could be done for the year? Blow your mind, right? How many people here appreciated that I held that Mexican peso trade for over 3 months? Not that it was 600% internal rate of return, but that it was 100 days. What if a trade like this could last 365 days or more? Okay, so one might argue for last year, I mean, we had a giant rally and all that kind of stuff, but what if we broke it down to where we called this, which is yearly resistance, as generally the top, and that this is yearly support. I guess I'll do it that way. Sorry. Well, let's do it the same. Let's be consistent. Isn't that cool? See, yearly support, yearly S1, yearly R1. And you knew that, right? On December 31st, 2021, you had a reasonable idea of the projected top and a reasonable idea of the projected bottom. Reasonable. It's not perfect. Okay? But what if this is something similar? Now, of course, it could do this. It could. So you're going to have to do some analysis. Okay? Or it's going to do this. Which one? Well, that's your job. And I think if you can't do that, then you're going to be stuck in day trading mode. And it's not the best way to make money. You will stay small for a very long time. So Matrix, yeah, so you need to work on that. That's all. Now, Mark says, or range. Yeah. And so I would then say you'd get kind of stuck on this. If you think it's going to range, then you should get into something similar that has a positive yield. Okay, but to get this right, you have to be able to accurately predict the future of the S&P 500 1 year out. If you're going to get gold right, you're going to have to get the S&P 500 right. And if you get gold right, you'll also get Bitcoin right. And if, okay. And that's what I mean by Newtonian physics. It's all the same trade. Only the names will change. Yeah. Cool. All right, I'm done. I'm spent. How are you? It's time to go, right? It's going to be a great week. Tomorrow is CPI. It's going to radically add volatility. Volatility is bad, by the way. And then on Wednesday, we have retail sales. Once again, it'll add lots of volatility, and volatility is bad. So I want you to think outside the day, and I want you to think about what you want for the week, for the month, for the quarter. And are you selling high or are you buying low? And think about that and let the volatility possibly give you trade opportunities based on what you already want. So if the market skyrockets and it goes up 150 pips, do you already know where you want to sell because you're actually a bear? And you're like, oh my God, look at all this crazy volatility off of CPI. Totally wrong. A bunch of emotional traders reacting emotionally over a news event. But you're like, nah, but they're wrong. And you already have selling high set up. 150, 200, 300 pips above. And now you're looking for opportunities and enter those short trades. Or the other way around. Okay? But the thing is, I want you to think beyond the next 2 hours, the next 2 days. And ask yourself, if retail sales or CPI spooks the market, what do you believe the reality is? And what would you do if you were a professional and you had to think 3 months in advance, 6 months in advance, 12 months in advance? Where would you want to be positioned above or below the market? Okay? That's my challenge to you, because that's what you should be doing. So without further ado, peace on earth. May the pips be with you. May your profits be above average. And hey, that just happened. Booyah!